Hey, what's good, everybody? What's good? So, I was actually wondering how we should start with this specific episode about candlesticks and candlesticks patterns. So, I was quite curious, but I really don't know where to start, guys, and I'm really not gonna script. I'm sure you guys know on my main channel, I really do a lot of scripting and all that stuff. But with this one, I just wanted to offload all my knowledge from all the recent years or all the past years, because it's been more than 6 or 7 years. And for all of you think trading is that easy, then you really have a wake up call coming at you. You really have a wake up call. But I'm already consistent, so I thought maybe let me just share all this knowledge. It will also help me have some new goals and new preparation and new plans. So it'll be really interesting. This is probably the first episode, right? I'm not sure if this is the first episode or not, but this is probably one of the most complicated episodes that I'll do, because when it comes to my strategy, I'm sure you guys should know by now, it's mostly based on candlesticks. Top down analysis, yeah, but it's mostly based on behaviors of candlesticks, because if you are a price action trader, candlesticks patterns and candlesticks are what tell you what the big banks or the big institutions are planning to do. That's basically how it goes. And forgive me if my audio, I'm sorry about that. Forgive me if my audio is a little muddy and stuff like that. But this is my first time doing something like this. So I hope you guys won't mind. So I'm gonna take my time with this one. I'm gonna go slow. I hope you guys are gonna be patient though. But for those who will make it to the end, then you will get my system, my whole trading system. Because trading is a system. It's not just about the strategy. Yes, the strategy is important. You need a profitable strategy, but it's mostly about psychology and risk management. Those two are the biggest aspects when it comes to my trading. I don't know about other people, but when it comes to my trading, I know it's mostly about risk management first, and then the psychology. You really need a stable mind, because if your mind is not stable, you'll keep moving sideways movement, you'll keep stagnating. But once your psychology is strong and you're able to weather those losses, you're able to accept those losses and stick to your system, that's when you start being profitable. Yes, and not being overexcited when you win those trades as well. So let's see, where should we start with this one? Where should we start with this one? And my mic is a little bit jiffy right now, but let's see, where should we start? So we're going to speak about candlesticks, right? When it comes to me, let's open some candlestick patterns. So when it comes to me and candlesticks, right? I only focus on two things when it comes to candlesticks. I focus on the wicks. I know you all know what a wick is, right? But let me show you, some of you guys who probably don't know what a wick is. But I'm really not gonna teach the basics on this series of episodes, guys. I hope you'll forgive me. I'll touch on them, but I'm not gonna stick to the basics. So let's see, what should I use? Let's use a circle. A wick is this thing, right? Wait. What is this thing doing? Yeah. A wick is this. Can you see all these things right here? Right here. That is a wick right there. For those who don't know, that's a wick. These are bodies, right? As you can see, the color is the same. It's black, because I don't care whether it's blue candles, red candles. I just look at the wicks and the bodies, right? The body and the wick. The body and the wick, right? I know some of you who have watched ICT. I've also taken a lot of concepts from ICT. I'm not gonna lie as well, especially when it comes to my entry system. When it comes to ICT, there's this thing that ICT calls the power of three, right? I'm sure some of you know it, the open, accumulation, distribution. Right? If I get it wrong, please forgive me. I don't really pay attention to those things. I only take things that I find useful, and then I run with those things when they become part of my system. So basically, what it means by accumulation, right? Let's do this. This was the open of this thing. Should we use candlestick patterns, or should we use a bar chart? Now, let's stick to the candle, right? Let's look at this candle right here. I'm sure you guys can see it, right? Let me do it full screen. If you guys look at this specific angle, please try and keep along and stay along, guys. I'm sure it's gonna be a little complicated, because someone has told me that I'm not really good at teaching. I'm not good at teaching, guys. So please forgive me. If you look at this candlestick right here, right? This entire candlestick, the one of Wednesday, 20 September. I'm sure you can see the date on the Wednesday, 20 September 2023, right? This candle right here. There is this long wick, and then this body, right? And if you look at price action, where it's some sort of resistance, this is a resistance, or some of you may call it may call it buy side liquidity zone, or let's say a liquidity zone, right? Or a zone where most traders are most likely to enter the market. Right here, as you can see, price rallied up, it shot down. In the past, price rallied down to that zone right here. It's the 35,000. It's 35,000. Look to your right. Yes, can you see where my cursor is? Look to your right where those numbers is 35,000. I rounded it off to the nearest number, because when it comes to investors and big banks, they pay attention to zeros and 50s. That's another thing that I learned from Astro Forex years ago. Zeros and 50s, the 35,000, 35,500, 35,250, 35,000, 25,000, 25,500. Whenever you have key support levels at those types of numbers, you should pay very close attention, because something might happen close to that region. Pay attention to the word region, because there will be manipulation. By manipulation, what I mean is, can you see this is 35,000, right? 35,000 was right here. You know what? Let's put a what do I call these things? Let's put a horizontal line, right? There's a horizontal line at 35,000, right? Let's go back there. This is 35,000, right? As you can see, at 35,000 in the past, let's say we were somewhere here. In the past. Price came back down. Look at what happened right here. This candle, it opened over here at 34,000, 34,946. And what happened? There was a huge accumulation above this level. Price was pushed upwards. For those who don't understand what accumulation is, price was pushed in the upward direction, right? It was accumulating on that day. Then what happened when it reached a certain point up there, 35,130? I don't know if that's 130 points or whatever. I can't really count those points. I'm used to peeps because I started in Forex years ago. So once price pushed to that point, what happened? As the day progressed, or probably in the New York session or later on in the New York session, price was pushed back down to 34,794. What happened? This level at 35,000 rejected price. But look at what happened. Price pushed really upwards first. That's what happens. The rejection was at this level, but price will push beyond that level. It will push beyond that level. This is what they call Judas swings. For example, over here, this is a Judas swing. There was a high over here, but what happened after this high? They know that there are buy stops right here. There are buyers who have buy stops there. So the next day they push price way beyond that level to take out all these buyers right here, and also to take out people who have sell limits. The people who have sell limits maybe over here, and the stop losses somewhere here. People who have tight stop losses, so they will hunt all these people. I'm sorry if the sound is iffy, guys. I'm sorry about that. I'm sorry if the sound is iffy. Forgive me about that. The price pushed upwards. They hunted all the sell limits and hunted all the buy stops as well. Then what happened? Price distributed in the right direction, right? This is what we call the open accumulations, where they were mostly hunting, or they were looking for a level where they were gonna find a zone where they will start getting those sellers coming in, right? Those big banks to start coming in. Obviously, the big banks who came in and pushed price upwards to hunt all your stops, or to hunt all the stops right here. But then what happened? Price pushed to the downside. So what I pay attention to these things. The week. You see what price, you see the information that I'm getting from these. Firstly, from the zone, from the level, right? At 35,000. That's the first piece of information that I got, that we are at a key level, a level where we are most likely to get some form of reaction, right? That's for starters. The second thing was, we got a huge movement upwards in terms of daily price action. Price accumulated upwards. They were hunting all these stops. And then what happened? This level rejected price with a strong momentum candle. I call them momentum candles, but it's a bearish engulfing candle, because it engulfs. This is a bearish engulfing candle pattern, right? I know some of you pay attention to those words. If you go to babypeeps.com, they teach you all these basic things, right? Engulfing candle pattern. This is an engulfing candle, bearish engulfing candle patterns. If you go and read up on bearish engulfing candle patterns and bullish engulfing candle patterns, you will know that when this happens, the next thing that happens is price will push to the downside. Right. These patterns are really strong, especially on assets like US30, the Nasdaq. Yeah, I'm not sure about S&P 500. I've never really done well with S&P 500, but these patterns are mostly very strong on the Dow Jones, the US30, Nasdaq, and Euro USD, GBP USD, the major forex pairs as well. Yeah, the major forex pairs, because the only assets that I trade personally, it's US30. After US30, it's Euro USD and GBP USD. I trade these three things together. I trade those three things. But anyway, back to it, right? What I was basically saying is I pay attention before, when the market opens. I open the daily chart. The daily chart is the most important. It's the most important time frame when it comes to candlesticks patterns, right? This is the most important time frame according to me. I don't know about others, according to me, right? So when I see this kind of candlestick right here, when I see this kind of price action, I know the next day I'm looking for sales. The next day I'm immediately looking for sales. I don't know where I'm gonna get it. We're still gonna touch on the sessions, because there's also going down to entries. You really need to pay attention to this. This shouldn't scare you. What happened right here? They were hunting, yeah, for these 1, 2, 3 days. They were hunting a lot of stops right here, right? But if you have a good entry system, I think I have a good entry system. If you have a good entry system, then you won't be hunted for these 3 days, and you will catch this huge movement. This movement is probably about 500 or 600 pips. Probably, I'm not sure. But let's see. It starts from 34.9, 34.8, 34.7, 9. It's 8, 7, 6, 5, 4. Yeah, it's more than 500 pips. This movement is more than 500. I say it's pips. I know I'm wrong, guys, because the way I'm reading these numbers, I'm reading the same way that I read in the foreign exchange market. But I know in the US, in the indices market, you're reading points or whatever they say, right? But let's get back to another candlestick, another example with candlesticks patterns, right? Let's go here. Right? We're at this key level, 35,000. Should we skip this one? Okay, let's go here as well. Let me show you this one, and let me show this one as an example. How I look at candlesticks. You guys can read up on bullish engulfing, bearish engulfing patterns, hammer candles, hanging mans. I'm gonna search them. I'm gonna search them after this. But anyway, let's open them. Let's do this. Candlestick patterns. Yeah, I'm gonna come back anyway. Why am I even using this browser? I should have used Google Chrome. Candlestick patterns. Let's see, which one should we open? Let's check this one. It looks a lot more clear and straightforward. There is that one. Let's open this one as well. How long is it? I hope this video hasn't been that long. Okay, still 13 minutes. So where is the thing? Let's see. I hope you guys, I mean, I know I might be speaking Greek, though. I know I might be speaking Greek. I don't know if some of you understand me. I hope you guys understand me. But I'm going to demonstrate these things with forward testing. I'm not really into back testing, guys. I'm not into back testing. I'll be forward testing using my FTMO account, as I said. You guys will get to see the FTMO account itself. You'll get to see the results. You'll get to see each trade by trade play and stuff like that. View image. I can't see it properly. I want to see this image properly. Let's see. Bearish doji. I don't use this one. Forget that one. I don't use it. Bullish engulfing. I don't really pay attention to the words. You see, when it comes to me, guys, I don't pay attention to the words. I look at the bodies and the wicks. That's how I trade. I look at how I read the information behind the candles. Let me put it this way. I read the information behind the candles. What the candles themselves, each individual candle is saying. What happened in that specific day, right? As you can see right here, this is a bullish pin bar. What this bullish pin bar tells me, I think this was the open. It tells me that price opened there. Price pushed downwards, right? No, it opened there. Yeah, it opened there. Probably pushed downwards. I'm not sure because of this. Another week, right? They probably pushed downwards, right? After pushing downwards, it found a key level down there, maybe somewhere there was some sort of support. Then it pushed back up. The body was over there. Maybe it pushed up a little bit and then it closed there. So what it tells me is that sellers tried to push price downwards, but then buyers came back into the market and rejected price and told us that they are stepping in at there's some sort of key level right there that they're stepping in into, right? That's how I read it. But you need to pay attention to the key levels. So as you can see right here as well, it's not clear. Can I zoom in? I'm not sure. Yeah, I think I can. 35. It's useless. I'm just gonna show you guys on the chart itself. Is that there's the morning star setup. Usually the morning star setup is basically there was momentum going downwards, price was moving down, and then it was undecided, as you can see with this small candle right there. After it was undecided, then there was a bullish engulfing candle. I say it's a candle, I know it's wrong, but let's say it's a momentum candle. There was a momentum candle the next day. It's telling you that price is most likely to move upwards. Isn't it? We trade with probabilities, right? Then there's the bullish doji. I don't use this. To me, this is to me personally, it's not a good pattern. To me, it's indecision. When I see this, I know that the bias of the market is losing steam. It's losing steam, as in the sellers are losing. The sellers are going out of the market. Let me put it that way. Whatever selling is happening here, it's losing momentum. That's how I put it. So the next day it'll probably go upwards. Tuesday tops, to me, I look at this one in a similar sense that I look at the engulfing pattern. This Tuesday top thing. This is basically to show you guys that I don't really pay attention to the words. Leave evening star, morning star. This, to me, when I look at this, I look at this specific candle. This is a bearish momentum candle. So I'm like, okay, the next few days were most likely to go downwards. So I look at the data behind each individual candle. Let's look at more recently, right? This is Euro USD, I think. As you can see, these are the zones that I had, right? I had this zone right here. This was a minor zone. I think this was an entry zone. I used that zone for an entry, so don't pay attention to that. And then there was 94, close that, and then 11000. There's the investor psychological zone right here, or right here. 10000. These are investor psychological zones, right? You remember what I told you guys, zeros and 50s, right? I think this video is gonna be very long because I'm probably gonna stray away, come back, because I'm really trying my best to simplify these things, but these things really seem complicated in my mind right now. They seem complicated, but I'm really trying my best, guys. So the 1.100000 investor psychological level, 1.05000 another investor psychological level, right? That's how you find these investor psychological levels, or zones where investors are most likely to cause something to happen in the market. But anyway, price was pushing upwards, right? Price was pushing upwards. We're in a bullish trend. By bullish, we mean we're in a buy market. We're in a buy market, creating higher lows, higher highs, higher high right here. We got this candle. I don't know, should I put colors? I think I should put colors. People are gonna get confused, bro. Oh my god, people are gonna get confused. How do you change the color scheme again? I think I forgot how to change the colors. Body black. How do you change this thing? Let's do blue and red. Let's just use these two colors. What about the wicks? Let's use black. So I think this is a lot more clearer. I don't know, is my audio still working right there? Because I'm losing track of this thing. Okay, so let's take it down a notch, guys. Let's take it down a notch, right? So let me try and simplify this thing. We spoke about these things, right? What I emphasized about this is that it doesn't matter what the name is. What is important is the bodies of the candles and the wicks. Excuse me, the body and the wick, right? The wick and the body give you information. This bullish pin bar, or let's say this also looks like let's say, since it's blue, it's not gonna be good anyway. Let's use this one. Let's say let's go back there, because the colors are gonna confuse you guys. I think the colors are gonna confuse you guys, but anyway, let's go. The reason why the reason why I was using all black for the candles, because I don't want you to pay attention to the fact that this is a sell candle, this is a buy candle. No, I want you to pay attention to the bodies and the wicks, right? The bodies of the candles, the bodies of each specific candle, and the wick of each specific candle. If you pay attention to this, right, this was a bullish momentum candle. This was a bullish. Here's a signal. Here's a signal right here that we're entering a buy market, right? We're selling off, price pushed down, price tried to push down, but look at what happened. The wick at the bottom is way bigger than the body, right? In a sell market, when this happens in a sell market, you should know that there's some form of support down here, or the sellers still don't have enough momentum to continue pushing downwards, right? What happened the next day? Price opened over there, it pushed just a little bit down, but it rallied up, and then sellers still tried to push price back down. Oh my god, this thing is gonna be complicated. Let me try and explain it slow, guys. So price pushed down, right? The next day we're looking at the wicks, the wick, and the bodies, right? That's what we're looking at with each specific candle. So what happened here? Price opened the next day, sellers pushed price down. No, they pushed it up. Right? The first thing that happened, we accumulated up. Obviously in the sell market, it will mostly accumulate up, and then they distributed price all the way down. There was a strong rally in this specific day. Price pushed all the way down here. The next thing that happened, before the day closed, they pushed the buyers came in, pushed price upwards. Once price pushed upwards, it closed up there, leaving a long tail or a long wick. Some of you call it a tail, right? It left a long tail at the bottom, right? So what this is telling me is that these sellers in this sell market right here don't have enough strength, or they don't have enough momentum to continue pushing price to the downside. So the next day, what we do, we're still waiting. We're in a buy market mostly, so we are still looking for buyers, but we don't have that buy signal according to my system, my specific system. We're trading in probabilities. We need we need our probabilities to go higher and higher, so we monitor each individual candle, right? After this, we're like, okay, the buy market is still valid. This buy market is still valid. I'm sure I'm gonna teach you guys about the structure, market structure as well, higher lows and higher highs, right? We know that this is a buy market. Based on market structure, this is a buy market, right? So when we zoom into this individual candle, we know from this day that, okay, the buy market is still valid because sellers failed to push price down, right? Sellers were trying to push price down below this previous higher low. This is a higher low, right? Higher low, higher low, higher highs, higher low, higher highs, right? The structure of a buy market, right? Let's do this. That's not gonna work. Let's say higher. What am I typing? Higher lows. Higher lows, no. Higher lows and higher highs, right? I want to show you guys the structure of a buy market for those who don't know. Right, higher highs and higher lows are terms used in technical analysis to describe trends in the value of an instrument. Higher highs are peaks. Talking too much nonsense. I want to show you guys the structure of a buy market and the structure of a sell market. Right? This is market structure. We have strayed away slightly from candlesticks, but this is basics. This is just basics right here. This is just basics. Let's see. Oh man, I wanna zoom into this thing. How do I open it again? Open image in a new tab. Let's see. Still not zooming in. Oh. No, that's a little complicated. And oh, here's something simple right here. This video is gonna be long, guys, so I need you guys to have a huge attention span. I don't even know how many of you are gonna be watching this video anyway, so even if it's 10 or 20 people, it's probably gonna help someone. So higher highs, higher low, higher highs, lower lows. They put two trends right here, but look, this is a low, right? Market pushed up, that's a higher high. It retraced, this is a retracement phase. This is a retracement phase. It pushed down, higher low, pushed up, higher high, pushed down, higher low, pushed up, higher high. This is the structure of a bullish trend. Basics, right? Structure of a bearish trend. Let's go back to the main thing. Now you see it, right? Here it is right here. As you can see it as well over here, you'll see it right. Basically, in this structure, price must not, let's say maybe we're here. This phase must not go below this previous higher low, right? For this trend to stay valid. This low must not go below this low for this trend to stay valid. This low must not go below this low. This high must not go above this high. This high must not go above this high. That's basically the structure of a bearish trend, the structure of a bullish trend, a buy market, the structure of a sell market, right? This is market structure, right? Basic market structure. This is market structure in a trending market. Let me put it that way. This happens a lot in Forex, right? It happens a lot in Forex. It's really rare. It's really rare in indices. Indices is mostly when there's a huge rally. But anyway, as you can see right here, a low, up, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. As you can see it right there, that's basically, this is basically the structure of a bull market. So that's how I knew that, okay, we are overall we are in a bullish market, right? So let's go back to the individual candles. We know the market structure. We know the market structure. That's one. We know overall we're in a bull market, so we are trading with a trend, right? And we spoke about this candle, that it told us that no, this buy market is still valid because sellers failed to push price towards these previous lows and then breaking these previous lows. Sellers were failing right here. What happened the next day? Price opened right there. It tried to push down, as I said before. Then it pushed upwards, right? After pushing up, it was a fake out. For those who bought, probably those who were buying on this day, there were some people who were buying on this day. Price pushed up. It stopped them all out. Then it pushed down. Some of them probably thought it's a sell. Probably some of them were selling. It pushed down. It stopped there. Can you see what happened? It stopped right there. Right there. This is what we call manipulation. Banks do a lot of things in the day. Candles can tell you a lot of things that banks were doing in the previous day, right? That's why when we're trading, we don't need a lot of things. We just need candlesticks, right? I'm using these levels and I'm plotting these levels so that you guys can see them. But usually when I'm trading, sometimes I don't even pay attention to some of these levels. But it's a little bit rogue, but that's how I do it. But anyway, so that's what happened on this day. What happened the next day? Price opened there. It accumulated. This is the power of three, the ICT power of three thing, right? We still haven't entered the trade. It accumulated a little bit down here to 1.0893, and then it pushed all the way up to 1.95, right? Another investor psychological level. It pushed to 1.095. Excuse me for that. It pushed all the way to 1.095. What happened at these regions of 1.095? Price was rejected and then it closed right here at 1.093. But look at the candle. Look at the candle that it formed. This previous day's candle can fit twice in this body. The body of this previous day can fit twice in the body of this day, right? The body of the 23rd of November can fit twice into the body of the 24th of November. We are right here. After this candle, this is a momentum candle, right? A momentum candle engulfing candlestick pattern, right? You can say that. You can say it's a morning star pattern as well. If you look at the overall thing, this is a morning star. You see why I don't pay attention to the words? There is a morning star pattern. There is a, to me personally, there's an engulfing pattern. So that's why I just look at the individual candles. There was a momentum close, meaning what what I basically mean by momentum is that since price opened and pushed down and rallied upwards, even though it was beat down, but the body is still massive compared to the 2 weeks. The body is still huge, and the body of this day is still huge compared to the previous day. What this is telling me is that buyers really stepped into the market on this day. There was a lot of buying that happened into this market, and sellers did also come in, but sellers didn't have enough power to push the buyers back down, right? That's what this is telling me. So on the next day, there is a high probability that we will be buying in the coming few days. Higher probability. Remember why I'm saying probability, because the market does whatever it wants, but we are looking for the highest possible probabilities in each trading day, right? That's basically what I'm saying. So when we see these kind of candle after this kind of movement in this kind of market structure, right? Market structure, bullish movement, sellers are failing to push price down, right? That's 2. 3, we had a momentum close the previous day. That's a 4th reason, right? 4th reasons. We already have 4 reasons to enter this market in a buying sense, right? So what happened the next day when price opened right there was a gap. It seems like there was a gap, right? Wait, was it a weekend? 24, 25, 26. Yeah, there was a weekend. There was a gap. I can see with this movement that there was a huge gap right here. But it doesn't matter if it was a gap or not, right? So what happened the next week, right? The next Monday. This was a Friday. Oh yeah, it was a Friday. Oh my God, I forgot to even read the day. I was reading the dates instead of the day. So from Friday, that's how the market closed right there. And then when the Monday opened, it gapped, jumped upwards. And a gap, but another thing, a gap as well in this kind of structure is telling you that the buyers really want this market to go upwards. That's another telltale sign, right? Excuse me for that. So what happened the next day? It gapped upwards over here. It opened and it's 1.09431. But what happened? We need an accumulation, right? We need price to go. We need an entry. So once you are at this type, once you get this candle, you already have all your flags that okay, now we need to find an entry. I'm gonna do a video with the entry system and stuff. So you guys have to be patient with that. I'm gonna do a video with the entry system, so wait for another video because I don't know how long this video already is. This video is already 30 minutes long, bruh. So I'm sorry about that as well. This video is already 30 minutes long. So from here, right, it gapped upwards. What happened after gapping? Price pushed down back to these regions right here of the previous day opened. Is still pushed down and down. You will find a lot of key levels to enter. There will be a lot of key levels on this day. But let's see, let's go down so that you guys can understand. And I hate back testing. I don't like the replay function, guys. I really don't like that stuff. But you guys should do it. You guys should do back testing. Or just forward test and use very low risk. Right? So let's see. We have the daily candle on the previous day. So we are going to the 27th of November. Which time frame should we go to? Should we go to the 4 hour? Let's just skip to the 1 hour. Let's skip to the 1 hour. But I would prefer to go to the 15-minute time frame immediately. So as you can see over here, depending on whatever entry system you have, this was at 12 p.m. Also time zone. I'm going to tell you about sessions as well. So at 12 a.m., let's see the session. Let's go to the London session. So let's go to 11 and 10 a.m. right? At around 11 a.m. we're at a resistance level, right? When the London opened, we're at a resistance level. This is the resistance level of over here. Rejection in the past, rejection there as well. Early on in the morning at 7 a.m. it tested that resistance level as well. So if we're at resistance, you don't buy resistance. I know these are basics things. You should know that you buy at support, sell at resistance. The nearest support level is right here. Depending on your entry system, I use ICT. I use the ICT way of entering, but in my own way. I do it in my own way, but it's basically ICT. So what happened the next day? Price pushed back down towards a support level right here. And another thing that I'll touch on right now real quick is you must have a wide stop loss. Even the entry as well is about candles. Once you have an entry there, let's say maybe the stop loss is about 15 or 20 pips. But 15 pips is way 20 pips. 15 pips might be a little too tight for entering in the 1 hour time frame. But let's see. Yeah, it's not tight. It's pretty wide. So let's say you use the 15 pips stop loss down there. Whatever entry system you are using, I'm gonna tell you my entry system, but I'm just saying, I'm just running through it. 15 pips, and then European 1:4, 1:4 trade. Maybe you went out at 1:3, but European 3 RRR. But you can also get a 4 RRR as well right here. By RRR, I mean risk to reward ratio. So that's it right there. I'm sure some of you understood that part, but I'm not going to dwell on the entries, guys. I just wanted to give you an example of how you would have entered in the lower time frame. This is top-down analysis. After you got your signal on the daily, then you roll back down to the lower time frames for entries. That's top-down analysis, from the top going downwards. Right? You don't need many time frames. You need 2 or 3 time frames. Sometimes I only use 2 time frames at a time sometimes, bro. But sometimes, let's say maybe I got a signal on the 1 hour, and I want to make my stop loss a little bit tighter. I'll go to the 5-minute time frame or the 3-minute time frame, and then I'm gonna get, instead of getting a 15 pip stop loss entry, I'm gonna instead maybe get a 10 pip or 8 pip stop loss entry. Can you see the benefit of going to lower time frames? It's that, but you don't really need to go to lower time frames, because you need to pay close attention to your risk as well, right? If you're beginning, learn to keep your stop losses wide. Don't use a tight stop loss. Don't try to do those things where you're saying you're doing sniper entries or what. The market will burn you. That thing's gonna burn you. It has burnt me a lot of times. But anyway, we're right there. The market, as you can see, the market kept pushing up. Push up. We reached the 1.10 level. And then the selling side now. Let's talk about the selling side, guys. Let's talk about the selling side. So rewind now. Let's do an example, a sell example. I'm gonna give you 2 examples. There's one there, there's one here, there's another one over there. Like, there are a lot of sell examples right here, a lot of them. Where am I even gonna begin? So I look at individual candles, as I was saying before. Market structure is very important, yeah, but it's basic stuff. So higher lows, higher highs. You caught this trade. The next time you were out there, one day, no trade on this day, you skipped one day without a trade. Remember as well, the best part, the most important, another most important part about trading as well is the waiting phase. The pain, that phase is painful, yeah, but you get used to it. You make money by learning to sit on your hands and wait. Read each candle as it forms day by day until you get the right structure that suits your system, right? So as price pushed upwards, the 1.1 level, do you still need colors, guys? I don't think you need the colors. Let's go back to the black theme. Let's return to the black theme. I don't need the colors. I want you guys to pay attention to the bodies and the wicks. Don't look at these colors and stuff. Let it be black. Let's use a bright color for the wicks. Oops, sorry about that. Right. So as you can see, price pushed upwards. As you can see, when it's black, guys, you learn to focus more on the bodies and the wicks, right? The bodies being formed and the wicks being formed, not the colors. Don't pay attention to the colors that, oh, it's a red candle, oh, what's gonna happen? No. Look at the body and the wick. After looking at the structure, we're at a key resistance zone, right? Resistance zone, rejection right there. That's a rejection. Price pushed up, it was rejected, and it is a strong it is a strong momentum close that closed, not a momentum, forgive me. It is a big body that closed to the downside. It's telling you guys who are buying to sit on your hands and wait for another buy signal candle, right? If you're looking for a buy, at this point you must be out of the market and sitting on your hands and waiting, right? Waiting for something like this to form. Down, rejection, right? I'm not gonna go back to that because my head is gonna explode, right? Information is too much, bro. But where this candle sitting on your hands, the next day what happened? Price opened there, right? For those who don't know, let me show you guys properly. This is where price opened, right there. Where the previous candle closes, that's where the next candle opened, right there. What happened? Price pushed up, trying to give you guys a buy signal, and then there were probably people with buy stops here, buying and buying and buying and buying. Then what happened? It rallied all the way down. Don't forget, they're not just hunting buy stops, there are also sell limits as well that were hunted there. People who have tight stop losses. That's why I emphasize, do not use a tight stop loss. Study the market that you are using. I'm gonna give you the stop losses for Euro USD, but my point is, study the market that you're using and use a stop loss that is wide enough, but will also give you a good enough risk to reward ratio, right? That should be your first priority. Risk to reward should be your first priority. The first thing you think about before every trade is the risk, right? The reason why we are not buying on this day, we have weighed the risk. We are at a resistance level. So why should we be buying? The risk is not good enough. So we should step out. Stepping out is a way of lowering the risk being imposed on our capital, right? So it's all about risk, 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 risk. After the risk is the reward, right? You need to pay attention to that. Once you have mastered controlling your risk, then you can also master catching the right reward as well, because there's also the emotional side where once you see yourself in profit, you're rushing to exit a trade. Once you see a small pullback, you're rushing to exit. Also that. But anyway, the next day, price rallied with a strong momentum to the downside. This thing really tanked. It really tanked. Probably some major news came out on this day. It really tanked to the downside. It closed all the way down there, right? You don't sell there. This is the sell signal, yes, but you don't sell there. You wait for price to accumulate, or for price to go back and find a support level upwards there. So what happened the next day? Price went, okay, let's say after this candle, let's go back there. This is a momentum candle. Some of you may say bearish engulfing. Some of you may say evening star. Whatever words you are using, to me, this is momentum, meaning the wick on the candle, or the tail, is very tiny on the upside compared to the body that is pushing to the downside. So what this is telling me is that the sellers really pushed price down, and the buyers didn't have enough orders, or strong enough orders, or whatever terms you may use, to push price back upwards in a continuation of this previous trend, right? So it's telling us that these sellers are telling us that no, we are done with this current trend. It's time to start a new trend, right? The probabilities are high that the next few days we are starting a new trend, because the previous low has been touched already by one candle. There's a high chance that we are breaking this previous higher low. There's a high chance. It's unlike this one. When this one pushed down, can you see what happened? When this one pushed down towards this previous higher low, it was rejected, meaning there were buyers waiting here saying, no, it's not yet time. It's not time to enter a sell market. So what happened? We continued up, right? You read what the market is telling you. When the market tells you it's not time, or when the market says we are still selling, you sell. When the market says we are about to buy, you buy, right? Each candle tells you what the market is doing. This is probably going to be the most complicated of them all, but I think I'm going to do another episode as well for this one. But basically, it continued upwards. But the difference with this one, the sellers failed, the buyers failed to push price back up. So it's telling us that the sellers are allowed to push price into a new trend. So the sell market is about to begin. So what you're going to do the next day after this close, that was the 30th of November. And then on the 1st of December, you would have gone maybe, let's say, to the 1 hour time frame. Top-down analysis, remember that. What happened on the 1st of December? Remember the sessions as well. I really pay attention to the sessions. But since it's Euro USD, also the London session, most entries will most likely happen during the London session. Let's see, 6 a.m., 7, 8, 9. By 9 a.m., price had already formed a minor trend change as well. Can you see over here? We had a low, a higher low. What happened? 9 a.m. price broke that previous low with a strong momentum, can get the same procedure as well on a lower time frame. After that, you would have started selling, or even selling even there. I think even here. Let me show you guys why not using a tight stop loss is important. Probably 20 pips. My stop losses on Euro USD when I'm not risking a lot, it's usually either 20 pips or 15 pips. But let's see which one. Yeah, 15 pips would have worked as well. Can you see if you entered right there after this candle? If you entered after this right here and put a 15 pip stop loss, it would have been wide enough for you to weather this pullback right here. There was a pullback right here, price then tanked all the way down. Euro USD has a very huge risk to reward ratio. I'm going to tell you guys about that. Do not underestimate major pairs. That's another thing that I learned the hard way. Major pairs sort of have long term, they low key have a very good risk to reward ratio compared to Nasdaq. Yeah, because US30 has a huge risk to reward ratio, but compared to Nasdaq, they hold their own. By major pairs, mostly I'm talking about Euro USD and GBP USD. The others can be funky and do weird stuff, but these two main major pairs, the euro dollar, the euro dollar and the pound dollar, huge risk to reward ratio. Whatever entry system you used right here, or even if you used a candlestick pattern right here, like for example over here, this was a evening star pattern, and you entered it at that evening star pattern, 15 pip stop loss, and then exited at the next level, 1:4 risk to reward ratio. We're gonna touch on the entries, so please be patient with the entries, guys. Don't panic. Do not panic yet. This stuff is so easy, but it's so complicated as well. I know it's complicated. I'm not good at teaching as well, so I hope someone is gonna understand. I hope someone will understand. So you would have caught this recent sell. There was a sell recently. You would have caught this sell for, it lasted for how many days? 1, 2, 3, 4, 5, 6 days. And I think I also had a small sell right here. I had a sell right now on my FTMO account. I have a sell. I'm gonna exit that trade Monday morning, I think, because I don't like these close. This close is telling me there's a level right here. I forgot to close it. I was supposed to exit at this point right here. Let me show you guys. It's there. As you can see, guys, I haven't edited anything, right? It's right there. It's right there. I'm gonna also open the FTMO thingy. This is the trade that I took. When did I take it? Friday. Yeah, Friday. There's no liquidity, and that's the weird thing about this. I was supposed to exit at a 1:2 risk to reward ratio. I was supposed to exit somewhere here, somewhere there, but I forgot to put a take profit. I only put a stop loss. So it is what it is, though. But who knows what's gonna happen? Maybe Monday is gonna push downwards. Let's open FTMO and see. So let me open FTMO. How long has this video been? Oh man, I hope I don't make it too long. While we wait for FTMO to open, the FTMO server, the other FTMO account, because I've got the one that I'm using on this laptop is the one that I've been using to back test and to forward test strategies, because I've been trying to form a system. I was trying to form a system using ICT's thingy, the 2022 thingy, and I did form a system because it's now consistently profitable. So let's wait. Now let's go back there. I'm gonna show you guys when it opens. So where's another example? Let's use another example. Let's see. Here's another good example right there. There are a lot of them. There's another one there, down there as well. But let's go over. If you look at these candles and these bodies right here, this was a buy signal as well. Right here, remember, I think I caught this trade. This was a buy signal right there. Here's another one that I caught. I'm now moving the thingy. This was a sell signal. I caught this one as well in the past. And then there's this one. I didn't catch this one. I think I missed this one. Price was pushed up, but we're in a sell market. Remember the structure: highs, lower high, lower low, lower low, lower high, lower low, lower highs, right? This is the lower high region right here. That's the market structure of this one. This is a sell market. Price pushed upwards, trying to break the previous lower high. It tried to break this previous lower high region right here. It's a region. It's over here. What happened when it tried to break this previous lower high region? This candle tried to push up, but it was smacked all the way down. That candle was smacked. Can you see how this candle was hit all the way down right here? And look at how small this wick is, or how small this tail is. The tail is so small. This tail over here to the upside is a little bit big, right? Showing that price tried to push up, buyers tried to push it up, but sellers really smacked it all the way down, right? Closed with a bearish engulfing pattern. If you are reading the words, or you wanna be professional, whatever they say, bearish engulfing, but to me it's a momentum close. There's sell side momentum, right? Over here, sell side momentum. The next day, what we're looking for, sellers. Once you see this, you see this type of candlestick, you see this type of pattern in this type of market structure. The next day, you go to the 1 hour time frame or 15-minute time, whatever time frame you wanna go down to, you start selling. Look at what happened. You started selling at previous support levels. It rallied all the way down and pushed down. Yeah, I'm already tired, but anyway, let's see. I think I'm gonna I'm gonna do another one on candlesticks as well. But here's another example as well over here. In this zone, in this region. Oh, I did catch this one. I used a 10 pip stop loss. Oh, I caught a 1:3 trade right here. I think I was pissed, bro. This thing really fell down. It really tanked. And I missed most of this movement because I only exited at a 1:3 trade. And which is wrong. You shouldn't have those emotions. You should take what the market gives you and go out. But the reason why I entered that one is because price pushed down. It pushed all the way up, right? Look at how huge this tail is. How huge. This is a shooting star candle. I think it's a shooting star candle, but that's a huge thing. Usually I wouldn't take something like this. So once I saw this, I didn't sell. I waited. After seeing this, it was an alarm that you shouldn't be buying. For now, you should wait. Wait a little bit with the buying, and you should pay very close attention to sellers coming into the market. What happened the next day? Price pushed upwards with a huge tail, right? There was an accumulation upwards, hunting a lot of stops, hunting stops, then distribution in the sell side direction. We closed with a strong bearish engulfing close, or bearish momentum close. The next day I started selling. Price rallied all the way downwards. So as you guys can see, just having this candlestick system on its own, you're already profitable, consistently profitable. Just with this alone, you're already consistently profitable. Here's the trade right here. As you can see, here's the trade. As you can see, it's the FTMO challenge. It's a swing account. It's currently on 3%. So I'm gonna document every single trade of this account. Every single trade. It's currently on 3%. If I close this trade right here, I was supposed to close it there. It will be close to 4% drive right now. There's the stop loss. It's the FTMO challenge. I had a trial account as well. I was experimenting with this trial account. As you can see the losses on this trial account. I was just placing and testing out. The reason why I open a trial account is to get the stop losses, because I don't know how to use the stop loss calculator and stuff. I'm not good with that stuff. The time frame that I used to enter this trade was the 15-minute. I think it was the 15-minute time frame. Oh yeah, there it is. I entered this trade right there, because I could see with the structure in this 15-minute time frame. Okay, we might be onto something right there, but I would have loved to enter at a fair value gap, because there was a fair value gap somewhere up there. After this manipulation right here, those who know ICT, there was a fair value gap right there on Friday. Right there, there was a lot of manipulation there. Previous low, they manipulated this relative equal highs. Those who know ICT concepts, I'm going to teach you guys this. This is the entry system. I'm going to teach you guys. Relative equal highs right there. What did they do? They hunted all the buy stops right there, because once price breaks previous highs, people are looking to buy, and you can see it's forming higher lows. People are buying and buying and buying. They hunted it, brought it back inside. Then what happened? It created a fair value gap right there. This concept might be a little complicated for some of you. This is the entry system. Don't confuse it with the main topic of this video. There was a fair value gap right there. It retested that fair value gap, and if I entered right there, my stop loss wasn't gonna be tight. My stop loss was gonna be really tight, but it was gonna be probably around 15 points right there. 15 points, because the one that I entered right there, it's about 20 points. It would have been 15 points. Then I would have got about 60 points. Right? Huge 60 points. Would have been a nice 1:3 trade, but I missed that. I don't remember how I missed it, but I missed it. So I'm going to document the journey of this entire FTMO account. So I don't know which numbers I'm going to show, but remember the numbers. There it is right there. FTMO server, FTMO challenge. That's the number right there. So that you guys don't think I'm cheating you. It's 109802822. Maybe I'm going to close the last number. I don't know. Maybe I'm going to close it, but who knows. So you should also pay attention to that. I'm going to be documenting it. I'm going to create separate videos for it as well. But back to topic. Candlestick patterns. Am I going to need to make a second video for this thing? I'm probably going to... You know what? Let's save it for another video, bro. Let's save it for another video. Let's stop here for this video, because wow, this is a lot of information. But don't forget, you won't win all the time, guys. For example, over here there was an engulfing close. Look at the rally. The rally was very small. Some of you might have made good profit, 1:2 trades, but look, it came back inside. It would have taken you out right there. You would have made a loss. But if you caught this one that we talked about as well, can you see what happens? The psychology. Remember the psychology, guys. The psychology of trading. You see what happened right here? This is a signal. This is a buy signal. You would have entered a buy, and let's say maybe you didn't close the trade. It comes back. It takes you out right here. After taking this loss, what some of you would have done, you would have left Euro USD and gone to another pair. Then, not knowing that after 2 days of waiting, there would be another buy signal, you would have recovered this loss with this trade. 1:3, right? This 1:3 or 1:4 trade, you would have made a loss of, let's say, 1% right here, and then you made a profit of 4%, which means overall you would have made 3%, subtracting this loss. So the psychology, you need to have a really strong, stable mind, right? And also need to know to focus on few assets. That's why I'm only focusing on Euro USD, GBP USD, and US30. I'm not touching Nasdaq. Nasdaq is the best one that I know how to trade, but I'm not touching it. Okay, it's the second best after Euro USD, but I'm not touching it. Why? Because I chose US30. I prefer that one because there's a lot of movement in US30. There's a lot of retracements. So anyway, we're going to talk about all these other things in other videos. Let's leave it right here. I hope I didn't ramble on too much, guys. Did I give you guys enough information? No, I'm not even sure about that. But I think it's best we stop here then. Let's save other information for another video. And I'll catch you guys on the next one.